1 second. All right, looks like we're good to go. All right, guys, so let's get started. So we have one question from Andrew. He wants me to check out the pound Swiss. So let me pull that up real quick. So this is the position that we were in, I think, let's see, from yesterday, I think. Yeah, so we were in this position for a while. So we're in this from yesterday at 10 a.m. or maybe even before that, yeah, around 10 a.m. And it looks like, it came down below, and we were anticipating it to drop from here for a K2 zone strategy entry. But it looks like it just pulled back up. I know there wasn't a lot of news, but there was a good amount of news that affected the market yesterday and just stuff that was going on that caused it to shoot up like this. But then it rejected off the upper K2SR, which caused it to come down and correct back downwards. So right now, I'm pretty much just waiting for a bearish candle to close below like it did right here. In order for it to drop below, you can see right here that it came down. I thought it was going to close below in the last candle, but it didn't. Also, it was during the spread, so that's why there wasn't much volatility there anyways. And then it rejected off the lower portion of the K2SR, and that's why it's rejecting off a little bit. But I think once we close below the K2SR, so you can see right here, it's a pretty weak bullish candle. If it closes red and it closes below the K2SR, then I anticipate it to continue downwards. I think you hit our TP1 already, right? Let's see. Oh no, actually it didn't. So our TP1's right here for 20 pips. So I think once it closes below here, it'll drop down to TP1, and then it might come back. So what might happen here is I might drop down to TP1 and then do a break and retest, because it'll break this structure right here. It'll retest it back upwards, and then most likely reject off and come back down. But we'll have to give that some time because, I mean, pound Swiss is generally a slow moving pair anyway, so it's just gonna take some time, especially during Asia session. We're probably not gonna see too much movement, but this is kind of what I see happening right here. It might come down, it'll break, then it'll retest, and it'll come back down all the way, or it might just shoot all the way down. Who knows? We don't really know until it happens. I don't think there's any news today. Let me see if there's news. Over. So it looks like we're done for news today. There was news at 4:30, which was about 30 minutes ago. But other than that, it looks like it's pretty free for the rest of the night. And then we have INDICES news at 5:30 a.m. the next day. Let me check the chat real quick. I can just send it this as well. She can't get into this. All right, cool. All right, so let me go back to GC. Sorry, guys. So yeah, pretty much for GC, once it closes below the structure right here, then I anticipate it to break down below, and then it might retest, or it might just shoot all the way down before retesting or pulling back. I would just hang on to it. It's obviously in a sell bias right here. You can see from the pivots, it's in a pretty strong downtrend. Once the orange pivot crosses the red and they're all angling down, kind of like right here how they're angling up, you can anticipate a big move down to come, similar to how it was. Let me see when I trade down. Okay, so right here. So this is pretty much what it looks like right now, where the orange is above the red. So let me zoom into this. So you guys can see here that the pivots are angling down, but the orange is above the red right here. As soon as the red crossed the orange, it kind of consolidated a little bit before dropping down pretty heavy. That's pretty much what I anticipate happening over here where price currently is as well. So right here, you can see that orange is still above the red, but as soon as the red crosses with the orange, and then they're all angling down and then they spread out, that's going to provide for a strong downtrend. So once we get that, then I'm anticipating it to come down all the way to the next zone before it either rejects off it or it continues down to the next zone down here. With all the COVID news and with the U.S. dollars being weaker and weaker, as it continues to become weaker, people put their money in safe haven currencies like the Swiss franc, or the Japanese yen, and that's why I anticipate this to continue downwards. So I'm not too worried about this trade. I mean, I was a little worried when I was shooting up like right here, but when it rejected right off the upper pivot, or the upper zone, it gave me confirmation that price was going to correct back down. I think what was happening here that it was basically just filling the gap right here because there was a huge momentum swing downwards, and obviously what happens usually when it comes down like that, it usually has to fill the gap and then it comes back down. So that's basically what happened here, what it looks like. So I still think it's going to come down. So if you're still in this position, I think it's perfectly fine. I wouldn't worry too much because I do anticipate it to come down once it breaks below the zone right here. But yeah, so that's it for GC. Let me see if there's anything else here. All right, cool, yeah. So yeah, if you guys have any other questions, feel free to put it in the Q&A. I think that's it for most of the questions. We just have one other one for with iPhone. He's asking about SPX, so I'm going to look at the S&P after. But after that, we don't really have any other pairs that you guys want me to look at. So if you guys have any other pairs, feel free to let me know. Otherwise, I'm going to scan the charts for the 6 p.m. 4-hour candle close for the next signals. And then I'm also going to go over the K2 strategies for the new people here. I know there's a lot of new people here that want me to go over all of the K2 strategies, and I can go over them. It's going to be pretty simple, just like every other webinar. So let me go back and check this real quick. Andrew said, can I leave it open overnight with FTMO? Andrew, you could leave it open overnight. It hasn't hit TP1 yet, so technically you should still be in the trade. The only reason people would get out of this trade was if it hit TP1, they would have stop loss and profit. But it hasn't hit stop loss or any TPs yet, so technically this trade is still active, and whoever took it previously should still have it active right now. So yeah, it should be fine if you leave it open overnight. The only problem that worries me is that once London opens, usually during London Open, the market moves a little weird, and then if price is coming down, it usually reverses a little bit. So it might freak you out if you're holding it during London Open. So me personally, I think if it hits TP1, I'm going to move my stop loss and profit to TP1 so that I can get out. But if you're going to go to sleep right now, I think you should be fine because I don't see anything happening where it's going to go opposite. It looks like it's going to come down. So I think you should be fine if you decide to leave it overnight. I'm assuming you're going to sleep like 8 hours. That's like 2 candles. So by the time you wake up, it'll probably be below here, and then probably near TP1 or past it. So I think it should be fine if you decide to hang on to it. It should be fine for like the next 8 hours, especially since we're in London session. Market's just going to be super slow. Let's see. All right, cool. So let me see if there's any other questions around there. All right, iPhone. So let me look at S&P for you. So I'll pull up S&P real quick. So S&P is super bullish. The only problem with S&P is that it's getting near a pretty strong resistance point. So let me look at the SRs. So I have this zone right here. I have this zone right here. And I got that upper zone from the daily. So this is going to be the daily resistance. Take out the XRs. All right, we're good. All right, so the thing with S&P right now is that it's getting close to the strong zone right here. If you guys are familiar with the K2SR, these are points where price are likely to reject from, and they normally do reject from them. So you can see right here, price came up, it rejected off the zone, came down. Came up, tested again, rejected, came down. Right here it broke and retest, so retest right here, and then it continued upwards. Again, right here it came up, came down, rejected off this zone right here, came up, and then tested right here, consolidated sideways. So this is a little bit of a risky area to trade S&P because what might happen here is either it's going to test it and reject off, like it's done over here. So you can see it obviously test, reject, test, reject, right? It might test it and break above it. So the thing with S&P right now, like me personally, I don't like trading around these areas because these areas are they're known for manipulation. Because the thing is, a lot of institutions and market makers, they know that everyone's looking for these specific areas. Like everyone's looking at the same thing that we're looking at, or they're to some extent. So depending on what sentiment is, if sentiment is bullish or it's bearish, usually the institutions will go the opposite direction. So let me check actually. So let's see, we got S&P 500 IG sentiment. All right, so I got it right here. So 62% of people are short right now. So that's exactly what I was mentioning. So see right here, majority of people are anticipating price to reject off this point. What I see happening here is the market makers will probably they'll push down a little bit, like right here. So they'll let the rejection happen right here, and then they'll push it down because 62% of people are short. So obviously the market makers aren't going to push money where everyone else thinks, like where everyone's going to be trading, because the only way the banks and institutions are making money is if you lose. So the thing is, they're going to push price up right here, they're going to reject off it right here, and then what I see happening, what normally happens is they're going to trick you, because they're going to let price reject off here, and then people are going to think that it's a sell, because it's been pushing up for so long in S&P, so people are anticipating a drop. So what might happen here is it's probably going to reject off it, and then as soon as as soon as you have enough people in our sells right here, they're going to shoot it right up. So that's what I see happening here, and that's why I don't like trading around these areas, because this is probably what's going to happen. Or what might happen is they might break people above, or it might just shoot above. Like they might not even give people the opportunity to hop into here. They might just shoot it straight up like they did right here. So this is exactly what I just see what I drew right here, where it came up, rejected, came down, and it shot up really strong. That's exactly what happened right here. Price came up, rejected off the K2SR, came down a little bit. So people, there's a bunch of people selling here because they're like, oh shit, like the sell-off is happening. So everyone tried to jump into this trade, everyone followed in, and market makers are like, nope, and they shot it straight up and stopped everyone out. That's exactly what I see happening right here. People fall for this trick all the time. It's a common trick that they play on retail traders. But yeah, so I mean, me personally, I wouldn't take sell, because there's more sellers. If there was more buyers, say if there was 62% people long, then I would probably see price rejecting off this point and shooting down all the way over here before it shoots up to stop everyone else out. Generally you don't want to trade with like the rest of everyone else, because majority of people fail at trading, and you don't want to be one of those people. You want to do the opposite of what they're doing. So let's see what the question was. Yeah, so iPhone said, should we hold S&P for the sell? Me personally, I wouldn't, because I have a buy bias here, and the trend up is so strong. I mean, if the trend's this strong, there's really no reason to hold like that. But I also wouldn't buy here, because you don't want to get caught in the manipulation in this area right here. So this area right here is probably going to get messed around with until direction is set. So I would wait until price breaks above this zone right here, and then once we get a bullish candle above this zone, then I would take a buy. But me personally, I just wouldn't take a sell. I'm not sure where you got that sell from. I'm assuming you got that from Wade. Let me check. So it looks like you asked for a sell. I'm not sure where you got that sell from. You got it from Wade, but I don't really see any sells. Okay, so this might have been the sell that you got from Wade, right? Yeah, see, Wade has a stop loss there just in case. Like, he's taking a gamble on this trade. which, you know, could play out. This could actually happen. The thing is, just looking at the chart here. So let me see how far is this from the next zone. Because he's trading on the 15-minute. This is the 4-hour, so it's a little different. But on the 15-minute, so it rejected off this zone right here. It's pretty much sideways, came down, came up. You know, honestly, you might go sideways for a while because we're still in Asia session, so it's not really going to move very much. So it might just go sideways before it goes up or it goes down. So me personally, I probably wouldn't want to trade S&P right now, especially during Asia session because it's just really slow. As you can see here, like the entire day, it's literally been going sideways. I mean, it's broke out of it a little bit, but it pulled right back into the range. So this is basically the range right now, and it's still stuck in the range right here. So, you know, it could probably reject off there and then pretty much bounce around, or it might shoot up. But, you know, depending on, you should probably ask Wade for his analysis because obviously our analysis are completely different. Me personally, the way I trade, I'm a trend continuation trader, and then I trade with momentum using the K2 indicator. So, you know, following my strategy the way that I trade, I would only be taking buys here because I don't like going against trends like this. Like, obviously, if you took a sell, like, at any point over here, you would have been screwed unless you took, like, this lucky sell right here that dropped down to this zone. But me personally, I have a buy bias because I don't want to go against a heavy trend like this. So if you want to get a sell analysis, maybe ask Wade, because Wade analyzed that as a sell. He was probably trading price action, like exactly what I was explaining here, like what everyone else is looking for. A lot of people are looking for a rejection off here, and then for it to come down. But me personally, I go with the trend. Like I never really go against the trend. So if the trend's trending up, I would take a buy. But that's just my analysis. There's no wrong way to analyze the charts. I mean, everyone has different strategies. But me personally, if you want to trade, you know, with the trend, then I wouldn't have taken sell. But this kind of looks really bullish right here, and it's rejecting off the K2 pivot. So I do anticipate this to shoot up a little further, like right there. So yeah, it'll just really depend on how much risk you want to take. But it looks bullish to me. So yeah, maybe chime in with Wade and Indices chat. All right, so let me keep going down. TJ's asking, is it the same with US 30? So let me pull up US 30 real quick. I mean, for the most part, it is kind of the same. Because they do move pretty similar, but they're not exactly the same. That's the thing. Like I would never tell you to take a trade in a certain direction just because I'm taking it for US 30, because I specifically trade US 30. I don't trade any other indices. But they do move. They do move very linear. I mean, not all the time, but they do most of the time. So we got a couple of zones right here. So, trying to get an upper zone so I can see where the rejection is going to be happening from. All right, yeah, so looking at US 30, yeah, it's pretty much doing the same thing, but it's more so in a range. It's ranging way harder than S&P. So you can see right here, like I mentioned, price generally moves from zone to zone. So price broke the zone, break, retest, shot back up, broke up here, and then rejected off this point, came down, and then out sideways. So it's probably gonna go sideways, test the top again, and then either break through it or reject off, and then just keep ranging until it finds direction. But it is Thursday, so tomorrow, well, the market's probably gonna be slow tonight, and then tomorrow it's probably gonna have crazy movement in the morning. But you know, this entire day, US 30 has been pretty much ranging this whole time. We almost hit full TP right here for our position earlier. So this is a position that we were holding from yesterday. But we actually hit TP1 over here. We hit TP2 right here, you know, a couple hours ago. And then it just pulled back up. It's literally been in a range. But I got out of this trade already. I got out at TP1 or 2, one of those. But it does move kind of similar to to S&P. It's just not exactly the same. So I wouldn't base your trades for US 30, specifically off S&P. But I do have a buy bias for US 30 as well. So let me see if I could find the sentiment. Google it. US 30 IGBs. All right, cool. So looking at the IG sentiment for US 30, it's pretty much the same thing. The majority of people are short right now, 71%. And these are most likely price action traders. They're trying to identify the top, but that's like a dangerous way to trade because the trend up is still pretty high. And there's a nice rejection off here. You can see price rejecting off the K2 pivots. So I anticipate it to keep shooting up and then testing this zone before either rejecting off or continuing upwards. I would go with the bullish move because the trend up is way too strong. Plus, like, there's a lot of the stock news benefits US 30 and S&P, the news that came out today. So I don't really anticipate it to drop at all. I mean, it might drop a little bit, but I don't think it's going to drop far enough, down here or even to here. This is a pretty big drop. So me personally, I don't like to trade with the same way other people are trading. I trade my own style, my own strategy, and it's been working for me. So I think US 30 would probably be bullish if you're thinking about entering US 30. Let me go back to S&P, see how it's doing. Yeah, it's exactly what I said. So S&P, it's going to come up and test the zone right here. So if it comes and tests the zone, that's probably what's going to happen with US 30 as well. It's probably going to come up, and it's probably going to test the zone. But yeah, so that's S&P and US 30. Let me keep going down the list. Like I said, I got stopped out for most of the positions. What's an alternative? I wouldn't re-enter any positions. Let's see. So we have odd USD that's still active right here. I think, yeah, you got stopped on a profit, right? Because it hit TP2 like way up here. So most of the people got out right here at TP2. I got out too. I'm not even in the trade anymore, but I mean, some people might still be in it. That's the only reason why I'm following it. But I wouldn't re-enter this trade because it's already swung into a downtrend right here. It's below the pivot, so I'm anticipating it to possibly have a reversal or probably come down to test the zone right here. So I wouldn't re-enter that. CAD CHF, this hit TP2 as well, somewhere around here. So most of us got out at TP2, but it's still in profit. So if anyone's still in this trade, it still looks good. But I personally wouldn't re-enter it because it's rejecting off the K2 SR right here. So it's probably going to come down, retest this area, and then either break below it or correct back upwards. So I wouldn't take that trade. It doesn't look like a good trade to me. This is KJPY. I think we had a position for this either this week or last week, but it shot up like crazy. I think we entered somewhere over here. And then we hit TP already. So we're out of that trade. I should have called another one because right here there's another entry, but unfortunately, I don't know what happened. We just got called. I think there was news during that time. Our CHF JPY position is still active. I took the trade here on my smaller account, my Forex.com smaller account, just to keep track of the trades. I should have got out already because we had TP1, but I'm just gonna let it run a little longer. Our Euro odd position right here. This trade's still active as well. It hasn't hit TP1 yet. Are you still on this trade? I think you might be in the trade still because I don't think it's hit TP1. So you should still be in EA. But THF, JPY, CJ, you probably got out of this trade because this hit TP1. So I think I just forgot to put my stop loss, but it's fine. I mean, I'll let it run for a bit. I'll see what happens. Our EJ trade, this hasn't hit TP either. So I don't know if you're in this trade yet. I don't think anyone got into this trade yet because it's still a pending buy stop. Or I don't know. I can't remember if it filled or not. It might have filled, but I'm in the trade. So if you're in this trade, it should technically still be active. It hasn't hit TP1 yet. But I'm just waiting for this to break above. So if this breaks above the K2SR, then I anticipate to shoot on up to test the next, the upper zone. So if that happens, I mean, good for us because we'll hit TP1 here for 23 pips, and then if you hold on to it, TP2 for 46 pips. So that's a nice one right there before the weekend. Your USD, I got out of this rate at TP2 right here for 40 pips. So we locked in 40 pips on this trade, but it's still above, it's still in profit right now, and then it's still trending up right now. It just established a strong uptrend right here. You can see because the pivots are all angling up, and then price is rejecting off it. So if we get a nice bullish candle, then I anticipate it to shoot on upwards and hit our full TP here for 80 pips. For this position, I think this is a good position because the US dollar is still super weak. So I'm anticipating this to keep pushing up further. Our GBP CHF position, I still have my small position on here too. This is on the smaller account right here. I'm waiting for this to break below, like I mentioned for all the other trades. So once this breaks below the zone right here, then I'm anticipating it to shoot on downwards. Comparing this to the US dollar, and Swiss franc is a safe haven currency. So as long as the US dollar is still weak and there's no bad US news or whatever, then the Swiss franc and the Japanese yen will probably continue to be stronger. So I'm waiting for this just to break below, and then I'm anticipating it to shoot on downwards. So I think you should still have this active. I'm not sure if you still have this, but this hasn't hit TP1 yet. So technically it's still active if you took that trade. This is our NZD USD position. This already hit TP1, TP2 for 30 pips. And then, obviously this is the long shot right here for full TP for 60 pips, which could still come down. So, I mean, it looks like it's coming down right here. The only issue with positioning a price is that once it reaches the zone right here, it might reject like it did right here. This is a high manipulated area, so it might reject off here, or it might continue. If it closes within this area, then I'm anticipating it to shoot on downwards, which will fill our full TP. So technically, if you should still have a couple positions active. Yeah, GC and then EJ. If you took all the positions, like technically those would still be active. Otherwise, you could still hop into those. I think with a buy stop or a sell stop. I wouldn't enter into them, manually, because the price, the entry is there for a specific reason. You don't want to get into a trade that's not in profit, or you just don't want to get into early. So let me keep going down real quick. Derek Darko said, Derek's not even here. So Derek said, do you guys consider yourself institutional traders? No. I mean, if I was an institutional trader, I'd work for an institution. I created my own strategy. This is all stuff that I created. It's my strategy, my algorithm, everything from scratch. And there's a lot of people that toss around that term that they're an institutional trader, but a lot of people that use that term, most of them don't know what they're talking about, because institutional trading is like that's all proprietary information. Like they're not supposed to teach that or sell that. Like we have agreements with the banks and stuff not to disclose that information. I mean, trading supply and demand, that doesn't make you an institutional trader, or trading support resistance. It just doesn't. It doesn't work like that. So me personally, I don't consider myself an institutional trader. I just consider myself a trader. But I do trade my own specific strategy. So I would consider myself a trend continuation trader that bases all of my trades basically off momentum. So yeah, I would never consider myself an institutional trader unless I work for the institution. But okay, so next question. Oh, CT said, do you have a new mic? Sounds distance. No, that's weird. Here, let's see. Can you guys hear me now? CT, does it sound a little better? I tried to fix in the settings earlier. I'm not sure what's going on with this. Check sound. Let's see, just different. My volume is maxed. Oh, that's weird. Yeah, output. you guys hear me now? CT, does it sound better? It was on my AirPods. My bad. That's why.
Sure. Oh yeah, okay. Sorry guys. Yeah, my AirPods were connected to my microphone. That's why my AirPods are like so far away from me. That's why you guys can barely hear me. But all right, so I'm assuming the volume is good now. Sorry about that, guys. But yeah, let me keep going down the question. So Forbes asking EJ analysis, and then that's the same question. I got that a lot from from like 4 people. So let's go over EJ real quick. All right. So pull up EJ. So this is our EJ trade from earlier. Here, I'll just break it down from scratch so you guys can see exactly how I identify that trade. For this specific trade, I was using the K² zone trading strategy. And if you guys are familiar with that strategy, I'll just show you guys how I analyze EJ before entering it. And then after that, I'll explain to you guys what strategy I use and how I determine to take that entry. So, this is a normal chart. This is what it looked like. Actually, here, I'll replay it because this is where our entry was right here. All right, so this is what the chart looked like when I called that trade this morning. First, what I do is I pull up the K2SRs. I try to identify where the nearest zones are. So I'll just draw a rectangle over this area. Draw a rectangle over this area. And then a couple more right here. And this is just so I know where rejection points are. So I know where price is rejecting from. And then since I have these down here and there's nothing up here, what I do is I just go on the higher time frame. Like I'll go on the 8-hour. And then if there's nothing there, I'll go on the higher time frame to the daily. If there's nothing there, I'll go on the weekly. I just try to find a ceiling. You want to know where price is going to be rejecting from. I think I entered this trade late, but let me, I'm just gonna see if I could find the area. Okay, no, this is fine. So I'll go back to the daily. I know it was a weekly. Yeah, so basically this is how I analyze the chart. This is too far. So what I do is I generally just put the, instead of putting a zone there, I just draw a horizontal line. Just so I know areas where price is likely to reject from. So now I'll go back to the 4-hour. That's where I entered this trade. And then this is what I was looking, and I'll hide the SR so it's clean. So this is pretty much what I was looking at when I enter this trade. So let me just put the requirements for the K2SR zone trading strategy. So for one, you want to identify direction of momentum. And that's using the K2, the K2 momentum indicator. All right. And then next you want to identify a break and close past K2 SR level. And then on top of that, that's about it actually. So after that, you can enter on the open of the following candle. And that's pretty much it. So in order to identify the direction of the momentum, I use the K2 momentum indicator. If you guys aren't familiar with the K2 momentum indicator, basically what it does is it'll give you a buy signal, and then after that, generally momentum swings in that direction. So right here we got a buy signal, price came up. Right here we got a sell signal, price came down. Buy signal up, sell signal down, buy signal up, sell signal down, etc. So first you want to identify the direction of momentum. Right here we have a buy signal. There's no sell signal following that, so momentum has a bullish bias, obviously. until we get a sell signal. So there's no sell signal right here. We got a bullish bias. Next, you want to identify a break and close past the K2SR level. So these are the K2SR levels. As you can see here, price generally comes, tests the zone, rejects off, or it breaks it. So right here, price came up, rejected, came down, came up, rejected, came down, came up, broke it, came up, tested this point, rejected, and then price pretty much moves from zone to zone. So you can see price broke the zone, rejected, came down, rejected, came up, rejected, came down, rejected, came up. So right there, we can identify, so right here, this is the next zone. But the zone's not lined up like the others because it's so far away. Like this zone is, let's see if I can, no, my keyboard will screw it up. All right, so this zone is about 100 pips away. So this gives open field right here. So instead of drawing a zone like this, we could just have an open space here. And this zone here is going to be the weekly K2SR zone. So these down here are the 4-hour zones. These are the weekly. So if price breaks a weekly zone, more times than not, price is going, this is a strong zone. So here, momentum swinging up, it broke the zone right here. And this is where I entered the buy position. And then an example for this previously would be right here. So price came up, it broke this zone right here, and then it continued upwards. So same entry, like it's the same entry right here, same strategy that I used right here would have been used right here. And then we could have locked in, or I don't know if I called this trade, I might have called this trade, but we would have locked in about 70, 80 pips. And that's pretty much what we're aiming for right here as well. So same exact strategy, just at a different price point. And now that I've broken down the strategy for you, I'll just analyze where we're at currently. So this is where it's at currently. And what I anticipate happening with EJ right here is, obviously when it breaks a zone, more times than not, there's going to be a rejection and then a retest, and then it shoots back up. So right here, I'm just waiting for this bullish candle to close above here for confirmation. So it could be like how it was right here before shooting back up. Because like I mentioned before, price generally goes from zone to zone. So right here, like I mentioned, price came up, rejected off this zone, came down, rejected off this zone, came up, rejected off this zone, and it just moves from zone to zone. And this is the way I like to trade. I like to trade within the zones. I don't like to, call any tops or bottoms or any of that stuff, because those are just risky trades. When you're trading like that, you're kind of just, you have a probability of 50-50 of probably of it going in your direction. But the thing is, price can literally go in any direction. If you trade from zone to zone, like right here, so if price breaks the zone right here, more times than not, it's going to go and test the next zone. It's not going to come back down, So right here, I'm just anticipating this. We have about 30 minutes left in this candle. So maybe in 30 minutes, this bullish candle will close within the zone. And then when it does, it'll probably shoot upwards to test the next zone. Similar to what happened right here. You can see price came down, came up, broke into the zone right here. And then what happened? It went from this zone to the top of the zone. Exactly what we're anticipating right here. So that's what I'm waiting for. You can see right there, it's breaking into the zone now. So I would just say, just to be patient. If you're in this trade, this is our active trade that we have right now. We're shooting for 92 pips. Odds are it might not break above this zone to hit full TP, but my guess is that it'll for sure hit TP1. We can move our stop loss to TP1, guarantee 23 pips right there, or it'll hit TP2 for 46 pips. And then it might continue on up before possibly rejecting off this upper zone right here. Like that. So I still have a very strong bullish bias for EJ. So if you guys are in this trade, the trade that I called earlier, I think you guys should be fine. Because obviously, like there's so many confirmations indicating that price is going to go up. Like first of all, price is above the pivots right here. So if you guys are familiar with the pivot strategy, once price is above the pivots are spread out and they're all angling up. That's a strong uptrend. Looking down here too on the trend meter. If you guys are familiar with the trend meter, this shows the overall trend on 4 different time frames. So I have it set to the intraday settings, the 30 minutes, 60 minute, 2 hour, and 4 hour. So on all those 4 time frames, price is trending up right now. So it's green down here. And just look at the chart. When it's green down here, price trends up pretty nice. When it's red down here, price trends down pretty nice. So there's so many confirmations indicating that price is going to go up. You know, obviously the trend is up. Overall, the current trend is up. Momentum is swinging up. You know, everything leads up. So I anticipate EJ to continue on upwards. Let's see if you have any other questions. Yeah, sorry, Melissa. Yeah, I didn't realize I had my AirPods on still. I was using them earlier, but I forgot to take them off. But okay, so let's see. We have about 30 minutes left. I'm just going to scan the charts real quick to see if there's any entries for the next 4-hour close. And then I'm just going to mark up the specific pairs so that once time comes, I can just take those trades right away. So right here for odd CAD, I don't see any entry here because price is entering the zone. If it breaks into the zone, then maybe, but there's a lot of zones right here. So thing is, there's a lot of points of rejection. Pricing can come right here, can come right here, come right here, come right here. But there's like how many levels here? 1, 2, 3, 4, 5. There's about 5 levels that it needs to break before continuing down. This is a very risky trade because price can reject at any point. So it can reject right here, it can reject right here, 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 or here. So I'm going to keep away from odd CAD, and also because odd CAD is a very slow moving pair. So today's Thursday, as you guys are aware, market's probably going to slow down soon as we get closer to the weekend. So it's just not a risk that I want to take. For odd CHF right here, I would like to take this trade if price closed below this SR level. So if price closes below here, hold on, let me check this. So if price closes below this point, then I can take a sell using the K2 SR zone strategy that I just discussed earlier. But if it doesn't close below, then it won't provide for any entry. So I just have to wait for that. Let me see if there's a lower zone on the 8-hour. Shit, actually, I wouldn't even trade this because look at all these zones right here. This is why odd CHF just continues to range, because there's so many zones. Like at each point, it just keeps rejecting off pretty much everything. So yeah, I'd keep away from odd CHF, odd JPY. So this is another entry using the same strategy that I just explained. Price, so the momentum is swinging up right here. Price broke this zone right here, closed right here, and then if we took this trade, it looks like it would have been nicely in profit, almost a full TP. I forgot why I didn't call this. I think there was probably news during that time, but it looks like it could have been a really good trade. Keith's asking, do we have a Euro CHF trade open? No, I don't think so. Yeah, no, nothing there, Keith. Not sure if you got that somewhere else or you might have taken it on your own, but there's nothing here. All right, let me keep going down the pairs. Oh, nice. So James said that Honest made a buy call for EJ2. So that's like triple, quadruple confirmation. Price is trending up overall. Price is trending up on the shorter time frame. It fits my strategy. It fits Honest's strategy. So I think EJ would be a pretty good buy. I'm thinking about like doubling up on my position, but I probably shouldn't. But okay, let me keep going down the pairs real quick. Just want to make sure you don't miss anything. Nothing here for odd. Well, actually, we technically still have our odd USD position open, so nothing there. CAD CHF, like I discussed earlier, price could either reject off this SR zone or it could continue on upwards. But we still have this. Technically, this is still active from the 10th. So from 3 days ago, we took this trade. It's still technically active if you guys didn't move your stop loss and profit. I moved my stop loss and profit at TP2, so I got out at about 25 pips. So this was a nice profit off that trade. CAD JPY, I've been watching this trade. I wish I took it right here when it broke. So using that same strategy that I just discussed, we have the momentum swinging up. Price broke the K2SR zone right here. Could have taken a long position right here, and then it would have hit full TP right there for 67 pips. Unfortunately, I didn't call it. usually if I don't call a trade, it's because there's news or something was going on. I usually don't I don't skip trades for no reason. I only skip trades if there's news or something. And yeah, this has a long way to go. So for CAD CHF, if anyone's in this trade, it's going to come up to test this upper zone right here. This is the next zone. So it's an open field. It might come down and then test the pivots before shooting up. But personally, I think it's going to continue up to test this zone. So I might take this as a personal trade, but it's not something that I would call for the signals, because obviously when I give you guys signals, I want to have an analysis behind it. I don't go off like gut feelings. I want to make sure that it fits one of the strategies. So I probably would have to wait for an opposite signal and then a bias signal to shoot back to provide for a pivot entry or something like that. CHF JPY. Yeah, sure, CT. We'll take a look at DX at the dollar index in a little bit. So it's CJ over here. This trade's still active from earlier. It hit TP1 earlier, but I didn't move my stop loss and profit. Actually, I'm just gonna close it because I need to follow my rules. I mean, technically, I could have let it run to full TP, but I like to follow my rules. Like when I have my exit strategy there, I use my exit strategy all the time. It's just good practice because this trade might hit full TP, but if it doesn't, then I'm out in profit. So right here, I still see CJ going to full TP, but it is Thursday, and I hate trading Thursday nights. Market gets crazy. Euro odd right here. This is our position from earlier this morning. It's still active. Hasn't hit TP1 yet, so I'm still anticipating it to shoot on upwards. Euro CAD, no entry right there. Euro CHF, nothing there either. EG, nothing there because it's rejecting off this this K2SR level. So I wouldn't take a buy until it breaks above here. So if it breaks above here, then yeah, I'd take the long position. But like I mentioned, it is Thursday, so it doesn't look like there's going to be very much movement for the rest of the week. EJ right here, exactly what we covered. There's about 20 minutes left on the clock, so it's got 20 minutes to close above the zone. Once it does, then I anticipate it to shoot on upwards. Euro NZD. This would have been a nice buy. When did this occur? So this was last night. I think there was news last night. That's why I didn't call it. There was also news this morning, I think, so I didn't call that. But this would have been a nice buy right here, using the same exact strategy that I've been explaining. Momentum swinging up, price broke this K2SR zone, valid entry right there. That'd been nice. So if we took this trade right here, it would have been profit like 40 pips already. But it's too late now. I wouldn't enter this trade. Don't get any FOMO. Let's see. Andrew's asking about Euro USD. So for Euro USD, this is what we just covered earlier. So basically, I still see it coming up. Right here, we have a nice rejection off the pivot. So if we get a bullish candle here, then price action will show that price is probably going to shoot on upwards. But there's not really much. I mean, this has been moving slow like all day, so it's probably not going to pick up until London. So maybe like in 6 hours, you'll see it shoot up or have some actual movement. But I still see Euro USD being pretty bullish, especially with the US dollar being weak. So a lot of people have been asking me, how to analyze the pair. So basically, if price is going up, that means that the euro is stronger than the US dollar. If price is going down, that means that the US dollar is stronger than the euro. A lot of people get confused with how the pairs are aligned with how price is moving. So the way I see it, I basically see it as a seesaw. So right here, obviously, if price is trending up, the euro is stronger. If price is trending down, the US dollar is stronger because it gains in weight. So, weight, and then, I don't know, it's just one of the analogies that I use. It's an easier way for me to understand the direction of price. So right here, since the US dollar is weak, I'm anticipating it to keep shooting up. Okay, so let me keep going down. So that's your USD. We got GA right here. See if this closes right here. This would be a good entry for a buy, but it looks like it's too close to the zone right here. I mean, it's not super close, but it's pretty close. It's 30 pips away. So this would be an entry for the K2 zone strategy that I just explained earlier, because price came down right here. Price broke the zone right here. So came down, broke the zone, and closed above it. First requirement, momentum signal upwards. So the two requirements have been met right there. So right here would be an entry, but I personally wouldn't take it because it's so close to this K2SR zone up here. Actually, I might take it. This is like a, I'll just mark it. Maybe I'll call it. And then because our TP1, or let's see, so 53. Yeah. So TP1 would probably be somewhere around here, 22 pips. So, or TP2 would be right there. So generally we could, once price reaches TP2 right here, 22 pips, we can move our stop loss to that point. So that once price reaches the zone over here, we can either go for full TP or it'll retrace on us and stop us out in profit for 22 pips. It's a win-win for us. But I'll have to give it some thought. So I'm just gonna leave it there and I'm gonna mark it. We got about 15 minutes left on the clock, so I'll come back and take a look in a little bit, see how I feel once we get closer. But yeah, it looks fine. Actually, let me zoom out. I don't know why. Oh, actually, okay. I was wondering why this zone here was so wide, but there's another zone up there, so that makes sense. Yeah, so we should be good on that. I'll come back to that a little later. Pound CAD. So let's see, pound CAD. It doesn't. It still looks like it's coming down. So if anyone's in pound CAD, there's no entry for us. The entry would have been right here, or not. I guess I was waiting for. So what happened here was I was waiting for this candle to close below, and then I was going to enter a sell right here, but it never closed below until way down here, and it was just way too late to enter that trade. So that's why I have this marked up here, but it's not something that I called or something that we're in. But I do see it continuing downwards to test this zone right here. All right, so here is our GC from earlier. Like I mentioned, it's the same situation with EJ. So I'm waiting for this to close below this zone right here, and then I'm anticipating it to shoot on downwards. Same with EJ over here. I'm waiting for this to close above it so it could shoot on upwards. Same analysis there. Here's GJ for Mayank. Let's see. So looking at GJ right here, I was waiting for price to close above the zone right here. I think this is the daily zone. So once price breaks above the zone up here, then I would take a buy. The reason why I wouldn't take a buy right here is because it's just way too it's way too close to the next zone. It's just too risky for us to take that trade because odds are price might reject off it, and the last thing you want to do is get into a buy position and then price ends up reversing super hard. So let's keep moving forward. But yeah, I wouldn't enter this trade until it closes above here, because if you enter right here, if it rejects off that point, you're gonna get screwed because you only have a 30 pip buffer right here between these two zones. So we should probably hold off on that for now. But I'm gonna keep looking at it. So if I see this push up, from now until 6 p.m. or 10 p.m. When the next 4-hour candle closes, then I would take a buy position. Otherwise, it just wouldn't make sense for us to enter this trade right now. It's just too risky. And it looks like there's nothing available right now. It looks like the market's super slow. Damn, GN right here. Let's see. Yeah, Keith said GM look nice. Yeah, Keith, I was looking at this morning actually. So once price this closed right here at actually this is last night. So I saw it this morning when I woke up at 6, but it was too late. Like we would have had to enter it right here. If we did enter right here, this would have been nice because this is the same strategy that I just explained, where price broke this zone right here, and then we had the momentum candle, so it's a valid buy. But on top of that, this is also a pivot entry, because right here, if you guys are familiar with the K2 pivot strategy, basically, price is trending upwards. We identified the retracement right here, rejection off the K2 pivot, then a buy signal. So it would have been the same exact entry point. Unfortunately, we missed it. I think there was news last night. That's why we didn't take it. But yeah, that would have been a great trade if we ended up taking it, or for whoever took it. I mean, there's a lot of people in the group that have taken the trades themselves. So, they had the indicators, identified it, so they probably took it. Me personally, I should have just called it. GU right here. GU is like pretty much in a range, so I'm not even gonna mess with it. It like I mentioned before, just looking at the charts right here, you can see how clearly price moves from zone to zone. So right here, price literally bounces from zone to zone. So bounce from here, down here, up here, down here, up here, down here, dropped, came back up, and then literally just bounces from zone to zone, up, down, up, down, up, down, up, down. So for GU, let me see where the pivots are. Looks like it's crossing right here. So you can see price crossing these pivots right here. Oh, this is from the trade. So we had this trade active, and then I still have this alert open right here for stop loss, but we hit full TP, so we're not going to need that. I'll delete that. But what I see happening here is if price closes below, and then, well, if it does, this is not what I anticipate happening, but if this does happen, if it closes below the zone, then I anticipate it to shoot on downwards because of its attempt to break the pivot zone right here. But this is probably not going to happen. What's going to happen here is probably it's going to reject off that zone and then push back up, because like I mentioned earlier, the dollar is still kind of weak for my. Let me see. We could add the dollar index to this since CT mentioned it. So DXY, which is the dollar index. Yeah, the dollar is super weak. It's coming down still. It's coming down pretty strong actually. So I definitely wouldn't sell. I would just take a buy if we got another buy entry. Or you know what, I might even enter this late, because technically this might have been a late entry right here. Yeah, actually that's pretty nice. You could probably lock in about 50 to 60 pips right there if you were to ride that to the upper zone. But yeah, just looking at the dollar index right here, if you guys aren't familiar with the dollar index, this shows the strength of the US dollar. And it's showing that it's getting weaker. So if this is getting weaker, then this is probably gonna go upwards. Let's see. CC said it looks like it's basing. Yeah, I agree. I'd probably just wait for it. But if we get a nice rejection, if we get a rejection off this point, I might just take a buy, like a late buy for. Actually, technically no, because if we took this trade right here, we would have hit TP already. TP would have been somewhere around there for like 65 pips. So there's no late entry because that trade technically completed already. So I mean, yeah, although it would be a nice buy to like buy and hold, I would probably just wait for another entry to appear. But yeah, we'll see. I mean, a lot of stuff can happen over the weekend. Plus, we have U.S. news in the morning. At 5:30, we have the retail sales. I'm pretty sure retail sales are down because of COVID and everything. So it's probably not going to be good. But we'll have to see what happens from there. We got about 10 minutes left on the clock. Let me just scan through these again real quick just to confirm if there's any. Oh man, this would have been a nice intro here. So same strategy that I explained earlier, guys, with the zone strategy. Pretty much, we have the momentum down here. So it's a sell bias right here. Price broke this zone right here. And I wish I called this trade. I don't know why I didn't call this trade. But, oh, because it was at 2 a.m. Okay, so I was sleeping. Aaron should have called it, but Aaron's on vacation right now. So right here, if someone took this trade, I'm sure there's some people here that trade London session. So if you took this trade during London session, it would have been a nice profit right there. So if you entered right there, it would have been, you would have been in profit like approximately like 40 pips, 40 to, yeah, nearly 40 pips. And then full TV would be for like 73 pips. But yeah, I missed it. It was at 2 a.m. I was asleep. But that would have been good. But there's no entry right now. So, you know, just looking back at it, the entry was right here, but there's no new entry that's appeared. And that's why I'm just ignoring it right now, because there's really no reason for us to take a look at it. Same here for the other NC for New Zealand dollar versus the Swiss franc. So price right here broke below the zone. It would have provided for another sell entry right there using the same strategy. So basically momentum's coming down, price broke and closed below the K2SR zone. See what's going to happen here is probably price is going to come down, test the next zone right there. Same with NZD CAD. Although I don't think there's any nearby zones. So let me turn on the K2SR. Yeah, so the next zone is pretty far away. It's way down here. But me personally, I wouldn't just enter a sell, just enter a sell. But if you were in this trade, it's probably going to come down to this point before shooting upwards. So the market looks pretty dead right now overall. I mean, the NZD pairs move pretty slow overall, so I'm not really anticipating any like big movements out of them, unless, you know, there's something that happens in the world, but nothing that I'm anticipating. Right here for NZD JPY, there's just too many zones right here. You know, if it was an open zone, like right here, like see price came up, rejected off the zone, came down. The problem with this right here is that even though it's coming down, probably to test this zone ultimately, there's a lot of points of rejection here. So price could reject off this zone, this zone, this zone, this zone, this zone, anywhere, like anywhere from here. And it's just too risky to take. It's not something that I would take unless, so if this broke below here, see, there's a nice sell. So there's a sell momentum candle right there. If this broke below this zone right here, then I would take a sell, because then I'm anticipating price to push from up here to the next zone. Because that's basically what happens here, guys. So like, look right here, we have a sell signal, right? What happened? Sell signal right there. It went to this zone, ultimately to this zone, right? That's what I see happening here. Price breaks below the zone. I see it coming down to this next zone. But it's got a long way to go. Let's see how many pips. My keyboard's not working. So it's got about 40 pips until it makes it outside the zone. And the thing is, even though it makes it to that bottom part, that doesn't guarantee that it's going to break the zone. Like it can come down there and then it can shoot back up, or it can come down here and then it can shoot all the way down here. But we wouldn't really know until price got to that price point. And that's one thing that a lot of people need to remember. You know, don't take trades just because, you know, your gut tells you to take a sell. You should only take a trade when you have an edge in the market. Like you want to make sure that you're more than 50% sure that price is going to move in the direction that you're anticipating. Because last thing you want is you take a trade because your gut tells you to take a sell, and then it ends up reversing on you. You're gonna be so mad at yourself. So I would hang tight. You know, don't force any trades, because the trades will appear. So let's see, for NZD USD, price is coming down to this zone right here. So, you know, unfortunately, price might reject off it, or it might come down even further. So this is an active trade that we have right now. Looks like it could be playing out pretty nice, but yeah, we'd have to wait for this candle to close and to, you know, either confirm whether the rejection is going to come up or come down. UCAD. I don't know why we didn't call this trade. Oh, it was probably because of this zone right here, but this would have been a really nice trade. So yeah, pretty much for all of these entries, guys, I'm using the same exact strategy. Like I'm not doing anything different. All of these strategies are I mean, all of these entries are using the same strategy. It's using the zone strategy or the pivot strategy. This entry right here would have been the same entry for the zone strategy because price came up right here, broke the zone and closed below it. Then we had a momentum candle right here. So we have a sell bias. We could have taken a sell right here. Also, the K2 pivot strategy. So price is trending down. Price came down, retraced right here, rejected off the pivots, got a sell signal. Same exact entry, two different strategies. Here's another one right here. Same strategy again, like I mentioned. The zone strategy right here, because price broke and closed below the zone right here. Got a sell signal, momentum is coming down. We could have taken a sell right here, but I think there was news or something. This week was just a weird week, so I wasn't able to make as many calls as I normally do, just to be safe, because, you know, like pretty much all the K2 trades that I send out are trades that I'm personally taking. So I want to give you guys quality trades, and, you know, I want quality trades of my own. I'm not going to take some risky trades just to make a few profits here and there. I'm only going to give you guys trades that I'm almost positive they're going to hit TP. So right here, price broke the zone, closed right here. We got a sell signal right here for a sell momentum. We could have entered right here. Same situation with the pivot strategy. Price is trending down pretty heavily down here. Price came down, rejected off here. I mean, retraced from here and then rejected up here. And then we got a sell signal. So we could have taken a sell here. This is one thing that confuses a lot of people too. And it's very subjective. So it's hard for a new trader to really identify this unless you apply the strategy well enough. But right here, there's no clear trend, right? But the thing is, I was looking a little farther back. So I looked right here, it was a strong trend down. Right here, strong trend down. The reason I figured this was going to be a continued strong trend down was that you can see right here, price attempted to break this zone and it failed. It came back down. Again, right here, it attempted again, and then it failed again. So obviously, if it's going to correct to the overall trend is a sell. And then if you turn on the pivots, you would have had, you know, I mean, the trend meter, you would have seen the sells down here. So that's why I would have had a sell bias if I was looking to enter this trade. So I think, okay, one more pair, UJ. Right here, I mean, this would be a really nice buy if we had a buy signal, but we don't. So technically, this would have been a pretty decent zone entry right here if there was a buy signal somewhere around here, but we don't have one here. So unfortunately, there's no entry here. But if we do get a buy signal right here or right here, then it would provide for an entry for the same two strategies I just went over. For the zone strategy, because price broke this zone right here, closed above it, and then if we got a buy signal right here, it confirmed the momentum swing upwards. So if we got that, that'd be a valid buy there. On top of that, it would also be a pivot entry. So just looking at this right here, this is a pivot entry right here. So price came up, came down, and then we got a buy signal right here, and price was trending up from this area. So this would have been a pivot entry. Technically, I mean, it's a pretty ugly pivot entry because the trend isn't super clear. So technically, it could have been, could have not been. But me personally, probably. Oh, see, this is exactly what I was talking about. We got that buy signal right there. So I'll probably come back to that in a little bit. But yeah, I just went over all the pairs. There's literally no entries, guys. So, you know, unfortunately, this might be the end of the week for us, unless we see something at the 10 p.m. candle close. But it's still getting close to the end of the week, so we probably still wouldn't enter a trade, even at that point. There's a decent entry here for GA. So if you guys want to enter this trade, I mean, this is an entry here for GA. The only reason I'm not going to call it is because there's a zone right here. So last thing we want to happen is we enter this trade and then we get screwed once it gets to the zone right here, because odds are it's probably going to reject off it. Or, I mean, it could work in our favor and shoot upwards and hit our full TP, like it does sometimes. But, you know, like I mentioned, I don't like to take trades that I'm not 100% with. This is like a 50-50 trade for me because it's too close to the zone. It's only like 26 pips. So if this was like 50 pips from the zone, then yeah, I would take it. But right here, it's going to be tough because, look, the spread's 5.0. So you have to add the spread to that. You're only going to make like under 20 pips. Not really worth the risk, especially for GA, because GA is a cheaper pair. So I'm gonna pass on that. And yeah, I think that's about it, guys. There's no other entries for that are available right now. I'll just keep it marked, but I haven't marked anything else, so it doesn't look like there's anything else for us to enter. So unfortunately, there's no trades for the 6 p.m. 4-hour candle. We'll check again at 10 p.m. But just by the way the market's moving, doesn't look like we're gonna have any entries coming anytime soon. But yeah, so let me go back to EJ. So back to the question. So Mayank, he left already, but he said, why is the KT trend meter most show consolidation? The reason why the trend meter shows consolidation most of the time is because the market isn't normally trending. You know, the market only trends, I think the market trends like less than 50% of the time. You know, most of the time it's just going back and forth, it's ranging. Well, for Forex, the Forex market specifically, it doesn't really trend all the time. You can see right here, I could just take everything off the chart. So just by looking at the chart, you can see that price generally moves in waves. So price will be trending for a bit. So you can see right here, price is trending for a bit, and then it goes sideways. And then it trends for a short while right here again, and then it goes sideways. And then, you know, so on. Price comes down, consolidation. That's just how the market moves. I mean, the market generally doesn't like trend 100% of the time. It trends less than it doesn't. So this is normal for the trend meter to, you know, be different, for it to, you know, be blue most of the time. But also because we're in the summer, I'm sure a lot of you guys are aware that, you know, the market moves in seasons. During the summer, the market's generally pretty slow, but it's been pretty busy this year because of COVID, and there's just like, and it's election year, and there's a lot of stuff going on in the world. But normally the summer's pretty slow. And the reason for that is because, you know, the institutions and the market makers and the big players, they all go on vacation during the summer. And most of the time it's just a bunch of retail traders trading and not knowing what they're doing. So they kind of just push the market back and forth, or they push in one direction and then they push in the other direction. And that's why it's a little choppy, like a little more choppier than it is non-summer. So if we go back to like December, it kind of moves, there's more trends and it moves a lot smoother. Right here, you can see from January, it's moving pretty smooth throughout the year. And then February, this is when COVID happened. So I would just disregard like this whole area. And then over here in May, these are just crazy movements. Like this is insane. I don't even know how does this even happen from like May 6th to like in a month, dude. It moved like how many? I don't even know how many pips is this. A lot of pips. I don't know if this would be considered 1,000 or 10,000 pips, but this is a huge move right here for 1 month, and then it goes into consolidation, like normal summer. This is normal summer, I guess you could call it. So July was right here, or June was right here. Towards the end of June, hit July, and then it just pretty much consolidates for the most part. And then we have this random movement here. That's affected by a lot of other things. But, you know, overall, the summer is just a slow time for the market. But okay, let me go on to the next one. All right, so Mimi just got here. Mimi's asking if we can go over EJ. So yeah, I was going over EJ earlier. Unfortunately, it didn't close like I wanted it to. So, I mean, we're just watching now. We're waiting for a bullish candle to close above here. If the bullish candle closes above this zone right here, then I'm anticipating it to continue upwards to test the upper zone. But I mean, currently you can see right here, price has barely moved in the past. So this is all the way from US. I don't know what caused this huge drop right here, but this was a huge drop right here. And then literally the rest of the US session, it's just been going sideways. So it's moved about 30 pips, but for a pair like EJ, you'd expect it to move more during New York session, since it's a pretty widely traded pair. But it just looks like it's stuck in consolidation right now. I don't really see much happening with EJ until it breaks above the zone. Once it breaks above the zone, then I'm anticipating a shoot up. Otherwise, I just see it going sideways. until something happens, until something causes the market to push. Because personally, I just don't see anything happening from now until then, until London, at least until London session. I don't really see much happening during Asia unless something happens, if there's news or anything. I don't think there is. Let's see. Yeah, there's no news, and it's Thursday, so it's getting close to the end of the week, and it's as we get closer to the weekend, the market just slows down a lot. Until right before market close, there's probably gonna be a huge sell off or a huge buy, or I mean a sell off of one currency. So if a lot of the euros get sold off, then you can anticipate it to drop. Otherwise, if they buy it, anticipate it to go up. Let's try the index. Let's check the index. So let's go to the YXY, JXY. JXY is the Japanese currency index. You can see from the index, it's just going sideways. So I'm not anticipating any movement from the yen. Let's check the euro. What is that? EXY? Yeah. Literally, if you put them side by side, that they're just going sideways. So I'm not anticipating anything to happen from now until London session. So yeah, I mean, if you want to take a nap or go to sleep, I think you should be fine until London Open, because they're both of the indexes are going sideways. So there's not really much going on with this pair at all. I still see a bullish bias, but for the most part right now, there's not really much to look at. Yeah, you can see right here that price is above the pivot, so I'm still anticipating a strong uptrend. Looking at the trend meter down here too, the overall trend is still bullish. It's just neutral right now currently, but that's because price isn't moving at all. Once we get a bullish push up, then this should turn green again, and then it'll confirm a bullish trend and bullish momentum swing upwards. Yeah, otherwise I don't really see anything. There's nothing good here. But yeah, guys, that looks like all of the pairs for the day until the next 4-hour candle close. So let's see. If you guys have any other questions, feel free to put them in the Q&A. Looks like we're pretty much done for the questions. So I know there's a couple new people in this webinar right now, and they want me to go over the strategy. So I'm just going to go over the strategies, but if you guys have any specific questions, I can take away from the strategies, and I can go over any questions you guys have. But yeah, I can go down the questions right now for the new people here. So once you guys sign up to the K² course, this is what the course looks like. And then everything is pretty much broken down here. You have your unique links to join the Telegram groups. You have the trading view loophole right here. You have directions how to get the indicator, my watch list right here. This is something a lot of people ask for. This is my watch list here. So if you guys want to copy, the same exact watch list I have here, all of my Forex pairs, they're all in order too. So it's my Forex pairs, then commodities, gold, silver, platinum, and then my indexes, the Australian dollar, the Aussie, the Spain index, the French index, the DAX, Japanese index, NASDAQ, S&P, UK, and the US 30. And then down here, some more commodities, oil. I don't trade those anymore, but I just keep them on there. And then crypto's down here. Let's see. Okay, we have one question from Tiffany. So let me check out gold real quick. Analyze gold. Oh man, this was funny here because I went over this on the last webinar. Like, it was funny because everyone kept asking if they should buy gold, and I told them not to because I said this was going to happen, and this is exactly what happened. It went the opposite way, and everyone got fucked right here. So I was trying to warn you guys that this was going to happen. Like, there was going to be some sort of drop, but I know there was some people here. Is Amrit here? Oh, man, I feel bad for Amrit. I think Amrit took a buy. He ended up blowing his account. But yeah, I mean, you guys can't get caught in these little tricks that they do. Like, this is way overbought, guys. Like, this is why I don't trade stuff like this that are like hype assets, because they're just a breeding ground for manipulation. Like right here, this is crazy. Like, this drop from, what is this, the 6th? Okay, so the 6th from right here until, oh, so this was a whole weekend. So we had the webinar on the 6th, I think. And then looking at it now, like, geez, that's a crazy drop in 5 days. But it's not even 5 days because it counts the weekend. But yeah, this is a huge drop, guys. So the thing with gold is, if we compare it to the dollar index, I mean, the index is so confusing. Like, earlier it was angling down, now it's going back up. So depending on how strong the dollar, well, I mean, if it follows fundamentals, depending on how strong the dollar is, if the dollar goes up, gold generally will go down. If the dollar goes down, gold will generally go up. But we do have high impact news tomorrow morning for retail sales. I'm anticipating it to be bad because, COVID and everything. But I mean, I don't even trade news, so that wouldn't affect me. But just looking at gold right now, let me pull up the SR so I can see levels of rejection. But yeah, this was an insane drop. Like, it broke through these zones without even flinching. It literally went straight through the zone, came down to the next zone over here, went straight through the zone. That's how you know it was manipulated, or there's a huge sell-off. Like, people just FOMO'd in and then it just dropped like crazy, and it's trying to recover right now. But the problem with this is, let me see if there's any lower levels here, because this level is just way too far. I'm on the 8-hour. Nothing. Yeah, see, because the problem with this move here is that it moves so far up that no other zones were created down here. So there's probably gonna be a new zone that's created right here, because you can see that these line up. So once the computer, or once the algorithm identifies this as the zone, then it'll come up with a new zone right there. Or once that zone is probably there already, it just has to wait for one of these to delete, because you can only have so many zones up at a time. But yeah, okay, so just looking at this here, this is a tough situation, because the thing is, this can either come down, it can either, because it already rejected off this point, it could come up right here, and then it could reject down, or it can break right through this and correct back upwards. Like, there's a lot of different scenarios that can happen here for gold. And this is why I don't recommend anyone trade gold right now, unless you're willing to take that risk, because it's just a highly manipulated asset right now, because there's a lot of people trading it. A lot of people trading it don't know what they're doing. So the institutions are going to be able to play with them, and stop them out. So, I mean, me personally, I'm not trading gold right now. And I wouldn't recommend anyone to, because unless you have an edge, then yeah, I would take it. But there's really no edge right now, unless there's something that you guys see that I don't. I don't know if anyone else here sees anything, but me personally, I don't see an edge here for gold, because literally it can go either way. It can either shoot up from here, or I can reject off this area and come down. Plus, there's high impact US news in the morning. Retail sales are forecasted to be really bad. So if that happens, that could affect gold. Or, people react to the news with regard to gold or the US dollar. So after the news, US dollar might be weak. And then if it's weak, gold might skyrocket. But I would just wait for that. So I wouldn't take this trade until price broke above the zone right here. So if you were to take a buy, I would wait for price to break up here and close like it did right here. So you can see right here, price consolidated a little bit, shot up, broke and closed above here. We had a momentum bias right here upwards. So if we're applying the zone strategy, you could have entered a buy right here, and you could have locked in like 560 pips. Same situation right here. Price breaks above the zone. You can take a long position right here and then lock in another X amount of pips. Otherwise, if price breaks below here, so price comes from right here, breaks below this zone, take a short, same situation. You can take a trade off there too. But I mean, you just have to wait. I wouldn't take any trades in this area right here, because there's really no direction that's been set. It's kind of like a 50-50 bet right now. But me personally, I wouldn't even take the trade at all this week because there's news in the morning. So you don't want to get into a trade tonight and then end up getting screwed tomorrow morning once the news is released. So it's just too risky. I don't recommend taking it. But if you do, I would recommend waiting for it to break above this zone or below the zone. But yeah, okay, so that's gold. I think that's it for the questions. If anyone else has any other questions, feel free to put them in the Q&A. Otherwise, I'll go over the strategies right now. I'll go back to where I was. So yeah, if you guys want to copy my watch list, so I have my watch list right here. You can go on the K2 course, and then you can just go to the K2 watch list, and then you can download my watch list right here. And then once you download it, you can go up here, click this drop-down menu, hit import list, and then you can click the file, and then you can just upload it to your list. Andrew said, will 30 hit 27,800? Let's go US 30. US 30. I mean, technically, I think it will eventually, but right now, like we mentioned earlier, it's literally consolidating. If you like zoom out of this, or let's go like on the 15-minute or something, just to look at how the whole asset was moving the whole day. So if I delete all of the indicators, and then we zoom out from here, like literally it's been in consolidation this entire day. It broke out a couple times, but then it came right back down. So I don't really see much happening with US 30. Andrew said in a sell and wants to get out with some profit. Oh man, you held on to it, Andrew, from earlier. I got out, bro. Like once it dropped down here again, I got out super quick. There's no way I was holding on to this because I saw how much it was consolidating, and I was like, there's no, like, this is the worst time to hold a trade, like when it's consolidating like this, because it could break out in either direction. It could shoot up this way or it could shoot down this way. But yeah, if you're still in a sell, Andrew, I think it should come down. Here, let me turn on the pivots real quick. I just want to see where the rejection zones are. So not on the 15-minute, but let's go on the higher time frame. Okay, so yeah, this is a tough situation, Andrew, because the problem is, let me delete this. It's still above the pivots and it's projecting off the pivots. So it might come down a little bit like it did right here. It might spike down. So what I would do is I would just put your TP in profit, like just enough to cover your spread and to, to either break even or come out with like slight profit. So that once it does spike down, like it did right here, you can see it spike down a couple times. It like consolidated, spiked, consolidated, spike, consolidated, spike, spike. And then, yeah, so you said 27,800. That's a long way, Andrew. That's like, so let's see. Yeah, bro, that's like 1,200 pips. I don't know if it'll come down that far. I mean, it might, but that like during Asia session, that's a pretty far drop because it doesn't really move that much during Asia session. So let me go to a shorter time frame. So if you look back to past data, look at here at Asia session. So Asia session started right here, right? At 5 o'clock. So if you entered any trade at 5 o'clock when Asia session opened, it only moves it moves less than 1,000 pips, like 500 pips, bro. I don't think it's gonna move 1,200 pips during Asia session because like this is all the way until it only moved here because it got closer to the London session. So you're probably not gonna see volatility until midnight. But just looking at Asia session right here, it only moves like 500 to 800 pips. And over here, you're trying to aim for, I mean, it could drop. Don't get me wrong. It could happen. But just looking at previous data, it just, like price just doesn't move like that during Asia session unless price is trending. So you can see right here, price is trending right here from like Asia open. So it goes up directional. But the problem with US 30 right now is that it's just consolidating. So Andrew said, if I close now, it'll be -20. Just want to eliminate as much I think you could hang on to it. I think what you should do is probably just put your stop loss somewhere, or just actively monitor it. That'd probably be your best option. Because let me see if there's a. Actually, you might be good, Andrew. So hang on to it. If we get a sell signal, then you might be good, because you can see right here. Or I mean, I can't guarantee that, but because right here it doesn't look so hot when that happened. But that was because it was consolidating. So right here is just going sideways, but right here it's actually coming down. So if it's coming down like it did right here, once you get a sell signal, it might drop pretty heavy, because there's going to be a whole bunch of people trying to piggyback off that move down. And then you'll have the upper hand because you have the sell in, like you're already in the position. It's not like you're trying to enter a new position. So I would just keep watching it, and set an alert for the K2 indicators if you have. I'm pretty sure you have them, right? If you do, then I would probably set an alert for the K2 indicators, so that once you get an alert that a sell has happened, then you can look at the chart, and then you can basically trail your position with a trailing stop loss, so that you can minimize your losses as much as possible, or you can maximize your profits before it ends up shooting back up, because it's in a strong buy bias overall. So like looking at it here, it's very bullish. So we can't really identify whether it will, like how long it'll continue down for. Like it might continue down like it did right here for a little bit and then shoot back up, or it might even come down just a little bit before shooting back up. But it's going to be hard to really tell the direction, because the overall trend is up. Like I wouldn't take a sell right now, just because of the overall trend. But I mean, you can just hang on to it, I guess. Hang on to it, and then probably by 10 o'clock, like in 4 hours, once we exit London session, once we exit Asia session and we get closer to the London session, then take a look at it, see where it's at. If you're in profit, then maybe just get out and profit. Otherwise, it's just a risky trade to hold for a sell. Angel said, how do we set a K2 alert? Angel, so if you want to set a K2 alert, you just go up here to alert. You'll go to condition right here, click K2TS, which is the momentum indicator. Right here where it says K2 buy signal, change that to K2 signal fired. That way it'll give you an alert whether it's a buy or a sell. It'll give you an alert for both ways. And then for here, you can set your option to only once if you want it to only happen once per bar. If you want to have an alert, if it happens per bar, once per close, so that this will only give you an alert if it closes with the signal intact. So as you can see right here, earlier there was a sell signal. The thing with the momentum alerts is that they repaint. So they're going to repaint until the momentum has been confirmed. Once it's been confirmed and the candle closes, then it'll stay on the chart. Once it's on the chart, it doesn't come off. But if the candle hasn't closed yet and price is still moving up and down, the candle could still disappear. So in that situation, you would want to wait for the candle to close. So if you want to wait and only get the signal when the candle closes, you can click once per bar. This is how I do it. Once per bar close, actually. And then here you can set your dates. Unless you have a premium account, then which is the most expensive account, you can do open-ended. Otherwise, you'll have to set a date. I think you can set it out like about 60 days or so. So that'll work for that. And I think that's about it. For message here, you can set the message at whatever you want. So you can set it to like US 30 signal fired, or US 30 K2 signal, pretty much whatever you want to set it as. And then there's more options here as well. So if you want to email every time you get an alert, you can set that. I don't recommend it because you'll get too many emails. The webhook URL, if you have a third-party application for the alerts. And I think that's about it. I would probably leave these on right here, notify on app, so that you'll get the alert, and then show pop-up. So if you have the chart open, it'll show you on the chart that you have an alert. And then also right here, if you want it to send to your phone, you can have it sent as a text message as well. But yeah, I think that's about it for the alerts. And then once you're done with that, just click create. And then once you click create, it'll show up here on your alerts. So I have all my alerts set here, so I know exactly what's going on. So I have alerts here if it hits TP, stop loss, or any of that. And that's when I send you guys the update. So if I send you an update that we hit TP, it's because I got an alert here. And then for my US 30, that's what I have right here. But yeah, it's pretty simple. But yeah, guys, okay, so I think that's it for the questions. I'm going to start going over the strategies, but if you guys have any other questions, feel free to put them in the Q&A, and then I can take a break like I've been doing, and then I can answer your questions. Otherwise, I'll just go over the strategies right now, just for, the new people here. So let's see. I'm not sure if you guys wanted me to apply them on, a specific Forex pair, specific, or, any other asset. But I'll just show you guys. I'll start with Forex, and then we could probably move over to other stuff. But yeah, so the first strategy is going to be the K2 intraday strategy, and this works for all time frames. Like you can use this for let's close this. You can use this for the 4 hour. You can use it for the 2 hour, 3 hour, 1 hour, 30 minute, 1 minute, 5 minute, whatever you guys want to use it for. Pretty much all the K2 strategies work on all time frames. But generally, this intraday strategy was originally created with a 30-minute chart. But now I trade on the 4 hours, so you can do it on either or. But yeah, going back to the strategy, basically the strategy is super simple. It's the original K2 intraday strategy, and it's really easy. So first, identify a valid K2 signal. 2, confirm the K2 signal matches the K2 trend meter. Lastly, enter on the open of the falling candle. So these are the basic foundations to this specific strategy. But of course, there's going to be other things that you guys can incorporate. Like a lot of people incorporate, what do? They incorporate like the K2SRs, so they can see where price is going to reject from, or they incorporate the pivot so they can see how strong the trend is. But it's really up to you guys. I mean, there's no one way to apply the strategy. I just give you guys the foundation and the groundwork, how to apply the strategies. If you guys want to trade exactly how I do, but you guys are available to trade it however you want to. A lot of people in K2 they just use the K2 indicators to supplement their own strategies. But yeah, it's really going to be up to you guys how you guys want to apply it or how you guys want to adjust it. So let's just start with right here. So I'll just replay to this point right here. All right. Oh man, trend meter. Oh, okay, I changed this. So generally I have this set to the intraday settings, which me personally, I traded on the 30-minute, 1 hour, 2 hour, and 4 hour, just so I can see where price is moving for the day. Because obviously if you're trading, if you're trading a specific direction, you want to trade in the direction of the trend. So basically the way to apply the strategy, you want to identify a valid K2 signal, confirm that the K2 signal matches the trend meter, and then you can enter on the open of the falling candle. So right here, we have a valid K2 signal. It's a valid sell signal because it's a red sell signal with a red bearish candle. This would be considered a valid buy signal because it's a buy signal with a green bullish candle. This would be an example of a, where'd it go? This would be an example of an invalid signal, and this would be invalid because it's a buy signal with an opposite red bearish candle. So basically, to make things simple, if it's green and red, if they're not matching, that's invalid. If it's red and red, valid. Green and green, valid. Red, red, valid. So right here we have a valid K2 sell signal. Next, you want to confirm the K2 signal matches the trend meter. So right here it's a red sell signal, and then it matches the red trend meter down here. So those two requirements are met. Next, you can enter on the open of the falling candle. Enter a short position right there, and obviously you would have won. It would have hit full profit there for 66.9 pips. And then you guys can use the exit strategy as well. I'm sure you guys are familiar with the exit strategy. There's a couple different ways to exit the trade, but one of the basic ways is to have your TP1 at the 50% mark. So we'll just round this to like 70 so that it'll be easier for us to break it down. So basically right here, 70, and then the halfway mark is going to be 35 pips. Right over there. So pretty much once price reaches TP1 right here, TP1 is never where we place your profit target. This is just a reminder to move your stop loss to that specific point once price reaches there. So once price reaches 50%, you move your stop loss to that specific mark right here in order to eliminate your risk and guarantee profits. So if price was to come down, then retrace upwards, then you'd guarantee half the profit. However, if price ends up shooting down to completely, then you'd get full profit. So this is pretty much a win-win situation for you, and then it forces you to use proper risk management. So let's see, again, right here, we have another entry. The only problem with this entry is that there is news right here. So I wouldn't have taken this because this is a pretty high impact news. It's red, plus it's unemployment data from Japan. So I wouldn't have taken that trade. But if you did, it looks like if you did take this trade, TP1 would have been somewhere in the middle right there. So if you move your stop loss, like I mentioned up here, you would have guaranteed profits, and then you would have gone stopped out in profit rather than taking a loss. Let's see, another entry right here. So another valid K2 signal right here. It's a green buy signal with a green bullish candle. Down here, the trend meter is green. So if you enter this trade over here, you'd have locked in about 60 pips. So it's as easy as that, guys. If you guys can match colors, I mean, that's all you really need to know, because you just need to match green and green or red and red. The next strategy is going to be, so that's the first original strategy. The next strategy is going to be the momentum K2 momentum pullback strategy. And for this, you're going to do pretty much the same thing. Identify a valid K2 signal. And then the only difference is, instead of confirming a matching trend meter down here, you want to make sure the trend meter doesn't match. So confirm trend meter does not match K2 signal. And then lastly, you're going to enter on the high or low of the signal candle. So it's pretty much the same strategy, except now matching, you're looking for the opposite. So this right here would be a valid entry for the original strategy, but it wouldn't be valid for the momentum pullback strategy, because although this is a valid signal, it matches the trend meter. What you want is for them to not match. So let's go over here and see if we could find an entry. You know, it's going to be kind of hard to find on the 4-hour, because the 4-hour generally, they usually match, or they, let's see. Yeah, see, they almost always match. So let's go on the shorter time frame. So let's go to the 30-minute. This is where it's normally supposed to be applied. See if I can find the requirements. All right, so let's go back over here. Okay, so let's go right here. All right, so right here, you want to identify a valid K2 signal. Right here is a valid buy signal because it's a buy signal with a green bullish candle. So this is a valid buy signal here. And then next, you want to confirm that the trend meter does not match. So the trend meter down here is red. And the reason for this is because if price is trending in a certain direction, like right here, it's trending down, it's super clear. When you get an opposite signal, a buy signal against a high, like a strong sell trend, this is just indicating that this is a pullback or retracement. This doesn't indicate that price is going to continue in that direction or that it's going to reverse, because the trend is like way too strong. So in this situation right here, what we're anticipating is that even though we got a buy signal right here, price is likely to correct back downwards and continue with the trend. So right here, we identified a valid K2 signal. Next, we confirmed that the trend meter doesn't match. So for the third requirement, you're going to enter on the low of the signal candle. Since we're entering a sell, because we want to trade in the direction of the trend, we're going to enter a sell. If price is trending upwards, then we're going to do the opposite. We're going to want to take a buy. But right here, since we're taking a sell, we're going to enter on the low of the signal candle. So right here, we have a valid buy signal but the trend is downward. So in that situation, we're going to enter on the low of that candle. So we'd enter our sell right there. And then as you can see right here, price just retraced a little bit. So it retraced this way. We had that retracement signal right here. And then price went sideways for a bit before coming down. So our trade technically didn't fill until it got to this point right here. But you can see that as soon as it filled, it ended up shooting straight down. So technically you could have taken this trade right here, and then you could have taken the original intraday strategy right here as well. So that's 2 wins right there, guys. That's 30 pips, 30 pips. That's 69 pips. Yeah, 68, 69 pips. And then you could have done it again right here. Same strategy right here, opposite signal, opposite trend meter on the low right here. Another 35 pips, guys. And then again right here for an intraday strategy, enter sell right there. Another 38 pips. And this is brand new. Like I didn't back test this. I didn't know this was going to happen here, but you can see here that the strategy like works really well, especially on the 30-minute chart. So again, right here, opposite signal, you enter sell right here. You can see that it didn't fill until it got way down here. So price pretty much waited right here, and you had your sell stop right here, just waiting for price to trigger it. Once price triggered it, went straight to TP. You caught the momentum downwards. And that's why this is called a momentum pullback strategy, because the trend is going down. And then when you get a signal in the opposite direction, that's just a pullback. So you're waiting for that pullback, and then you're waiting for momentum to correct back downwards. So as soon as momentum does correct back downwards, it went straight down to, you know, TP with like little to no drawdown. And then again, right here, enter another sell. I mean, you guys can literally do this all day. And like, look how many wins that is, guys, from July 23rd to July 26th. Like literally, if you just traded UJ this whole day or this whole week, or I don't know, whatever it was, you could have locked in a ton of pips. So again, right here, and then hits TP again over there. And then again, right here. And then it hits TP again down here. Like, this is crazy. I feel like I missed out on these, unless we took these trades and I just didn't really think of, like, I didn't notice it. Again, right here, see, pullback right here, price came down, filled it, little to no drawdown, straight to TP. But yeah, I mean, that just goes to show how strong the K2 strategies are. You know, you can use any strategy and they all work very well. This is the momentum pullback strategy. The same with intraday strategy. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, probably 10, 11. How many wins there? 11 or 12 wins right there, using just 2 of the K2 strategies. And those are explained in the course right here. So if you're on the course, yeah, so if you're on the course, the official intraday strategy is explained right here. And then the momentum pullback strategy is explained right here. Very simple, guys. Okay, so the next strategy right here is going to be the pivot, K2 pivot scalping strategy. And the K2 pivots work on all time frames. So let's go over that real quick. And then for the K2 pivot strategy, you're going to use the K2 pivots indicator and the momentum indicator. So you're not going to use the trend meter for this. I'll just put this somewhere. And then now we'll go over the K2 pivots. So K2 pivot strategy, and this works on all time frames. So K2 pivot strategy 1, identify the trend via K2 pivots. Next, identify retracement pullback. 3, identify rejection off K2 pivots area. And then lastly, identify valid K2 signal. And then lastly, you can enter on the open of following candle. All right, guys, so right here, identify the trend. In order to do that, you want to make sure that price is above or below the pivots. The pivots are angling in the same direction, and the pivots are spread out. So the more spread out they are, the stronger the trend. So you can see right here, they're pretty spread out, strong trend down, spread out, strong trend down. Over here, the pivots are not spread out at all. They're not angling in the same direction, consolidation. Again, right here, price was retracing pretty hard right here. And then they're kind of jumbled up right here, consolidation. Spread out, strong trend, spread out, strong trend, jumbled up, crossing over each other, consolidation. So it's real simple, guys. So right here, we would have identified a strong trend downwards. So I'll just fast forward to there. So first identify the trend right here. Obviously it's trending downwards because price is below the pivots. The pivots are angling downwards and they're spread out. So this is a strong trend downwards. Next, identify a retracement pullback. So right here, price came down, established a low right here, and then it retraced up, right? Because it's going against the trend. So requirement number 2 has been met. Requirement number 3, identify a rejection of the K2 pivots area. So as you can see right here, price came down, retraced up, nice rejection of the K2 pivots right here. So requirement 1, 2, and 3 have been met. Lastly, you want to identify a valid K2 signal. Right here, we have a valid sell signal, and this is valid because it's a sell signal with a red bearish candle. So requirements 1 through 4 have been met. Lastly, you can enter on the open of the falling candle. So we'll zoom out. Zoom out again. Enter a sell position on the close of the signal candle right here. All requirements are met. Let it run. TP. So you would hit profit target there for 20 pips, trading on the 30-minute chart. Let's go for the next one. All right, again, right here. Same situation, guys. So right here, identify the trend. Obviously, we identified the trend already. It's in a downtrend. Identify a retracement. Price came down, retraced right here, right? Established a low, retraced up. Identify rejection. Rejection right here off the pivots area. Identify a valid K2 signal, valid sell signal right here. Enter a sell. There we go. Let it run. There you go. Another win right there, guys. And this is similar to the other strategy. Like, see the intraday strategy that I explained to you guys earlier? This is an intraday entry right here. It matches red and red, right? Entry. Right here for the momentum strategy. Opposite signal, opposite red trend meter. You enter a sell right there. This could have been 3 wins for you guys if you guys are using every like all 3 strategies. You know, the possibilities are like literally endless if you learn and you actually apply the strategy the way that they're supposed to be applied. Let's look for one more. Again, right here. Okay, so right here, identify the trend. Obviously, price is trending down. Identify a retracement. Price came down, established a low right here, retracement upwards. Number 3, identify a rejection. Right here, price came up, rejected off this K2 pivot area, and then it came back down. So 1, 2, 3, all met. Lastly, identify a valid K2 signal. Right here, we have a valid sell signal because it's a sell signal with a red bearish candle. Lastly, enter on the open of the falling candle. Enter a short position right there. Take the sell. And there you go, guys. Another win. Easy as that. And then you guys can apply this on literally any time frame. You guys want to apply it on 1 hour, 4 hour, 5 minute, 10 minute, 15 minutes, really up to you. Strategy works all around. So I could go here, go to the, so this is intraday, I guess. You go to the 4 hour. Same thing right here. Price is trending down, retracement right here, rejection, sell signal, enter a sell on the 4 hour candle. 56 pips right there, easy money. Okay, so let's see. That's it for those 3 strategies. So intraday strategy, momentum strategy, scalping strategy, which can be used on any time frame. And then lastly, the zone strategy. So this is the last strategy. We also have the daily US 30 strategy, but we'll just skip that because this was a weird week for US 30. I mean, I could go over that if you guys want me to, but I think a lot of you guys know that's probably the easiest one that you guys can apply because there's such a set time and so there's only like one requirement that you like trade after 6:30 a.m., which I mean, it's hard to get that wrong. But here, I'll go over to, so I'll just hide this. This is going to be the K2 zone trading strategy. I went over this earlier, but I'll go over it again. So basically identify direction of momentum, K2 momentum indicator. Next, identify a break and close past K2SR level. And then 3, enter on the open falling candle. Real simple. See, I try to make this as simple as possible, guys, so you guys can all apply it and, you know, excel at the strategy. It's super, I wouldn't say it's super easy to apply, but it's hard to master, because the thing is, when people start to see all these profits, you know what happens? People get greedy and they start skipping requirements. Even though there's only 2 or 3 requirements, people still skip them. But if you follow them, you know, by the book, you should be able to be profitable no matter what. But yeah, let's go over the strategy. So first we need to identify the K2SR zones. Okay. So here is a K2SR zone right here. And then another one up here. And then another one over here. Now let's hide these pivots. And then we'll just go. All right, so let's go over these requirements. So I'll hide the SR. All right, so first identify the direction of momentum. So right here we have a sell signal, right? So if we have a sell signal, that's going to indicate that momentum's coming downwards. Next, you want to identify your break and close past the K2SR level. So requirement 1, we've identified a sell bias because momentum is coming downwards. Next, identify a break and close past the K2SR level. So price broke this level right here and closed below it. So requirement 1 and 2 have been met. You can enter on the open of the following candle. So right here, we'll zoom out, enter a short position right here. And that's pretty much it, guys. So this is, it's, you know, simple, just like all the other K2 strategies. You let it play out, and there you go, full profit for 77 pips. And that's about it, guys. I mean, that's pretty much all the strategies that we have here. We also have the daily US 30 strategy for whoever likes to trade US 30, and I'll just go over that too, just so you guys can see it, because it's super simple. So I'll go over here, and then I'll just yeah, the charts are freaking messy. So I'll go back to a farther time, because the charts were just super messy during the everything that's been going on this week. So let's go to let's put the requirements right here. So this is the daily KT US 30 strategy, and it's super simple. So 1, only look, or I'll just put look for entry after the New York Stock Exchange open, 6:30 a.m. Pacific Daylight Savings Time. And then lastly, identify first valid K2 signal, and then 3, enter on open of following candle. Same with every other strategy. And then lastly, TP stop loss 1500 pips. And then you can set the TP ones and whatnot the same way that I explained earlier. It's super simple, and this is only applied on the 10-minute. All right, so let's mark up the charts where it's 6:30. See if I can find it. All right, so right here, let me take off the pivots. Rewind it. All right, so first, you're going to look for entry after the New York Stock Exchange open at 6:30 a.m. Pacific Daylight Savings Time, which is my time zone. For you guys, it's going to be different depending on where you're located. But looking at it right here, this is 6:30 a.m., right? So I have it marked right here. This is when the stock market opens. So when the stock market opens, you're going to identify the first valid K2 signal. Right here, we have a valid sell signal, and it's valid because it's a sell signal with a red bearish candle. Once those 2 requirements are met, you can enter on the open of the following candle. So we'd enter right over here. And then the TP and stop loss is a minimum of 1500 pips. So once we have that set up, like I mentioned, you can put your stop loss at TP1 or whatever, or you could let it run. It's really up to you. But yeah, so let's let it run. and then straight to TP right there. This is one that we actually took. So let me see. We took that. Let's see. US 30. All right. So you guys can see this huge drop right here. The same trade we took right here. And then I even have the parameters right here. So this is the, where's that? There's the entry right there. Super nice, super easy. But yeah, this is pretty much the same strategy you can apply every single day. So let's see if we find another one over here. So it's 6 o'clock. Take this with me. Let's go over one more, and then we'll call it a day, guys. All right, so right here, or 6:30 at 6:30 is right there. So let me just go and rewind this to, this is an invalid signal. This is invalid as well. And this is valid. So I'll explain why they're invalid again. Let's put this down here. Close this. All right, so first requirement, look for entry after the New York Stock Exchange open at 6:30 a.m. Again, like I mentioned, 6:30 a.m. is right here, my time. This is when the stock market opened. And then next you want to identify the first valid K2 signal. Right here, this is an invalid buy signal, and it's invalid because it's a buy signal with an opposite red bearish candle. So this is invalid, we ignore it. Again, right here, this is an invalid signal because it's a sell signal with a opposite green bullish candle. So these are both opposite, these are both invalid, so we ignore both of these. This would be a valid signal because it's a buy signal with a green bullish candle. So this is valid, invalid, invalid. So first requirement's been met. We look for trades after 6:30. Next, identify the first valid K2 signal. This is the first valid K2 signal right here. Lastly, you can enter on the open of the falling candle. So you can enter a sell position right here. And then the TP and stop loss will be a minimum of 1,500 pips. And like I mentioned before, you can put your halfway TP if you want, or you can let it run. It's really up to you. And then we let it run. And it looks like it hit TP. All right, so it hits TP right there. I mean, it took some time, but it hit it eventually. And the reasoning behind this strategy is that we're looking for entries after the New York Stock Exchange opens because we're waiting for the momentum to determine the direction of price for the rest of the day. So as you can see right here, we waited for the first valid K2 signal, right? Because the valid K2 signal gives you momentum. So the thing is, in the beginning of the market, there's going to be manipulation because orders are going to be coming in from after hours. So the orders from last night, they're just flooding in. And that's why price moves like crazy right when the stock market opens. But then what happens after that? Once prices stabilize, the institutions and the banks are like, all right, we're going to push price in this direction for the rest of the day. So once we get that signal, we enter that and then we piggyback ride the bank's move. So generally, all we're doing is we're just piggybacking off the banks. So the banks are like, all right, we're going to take momentum upwards for the day. So once we get that signal, we hop on and we ride that wave all the way up. Same situation with the other entry over here. We did the same exact thing. We waited for the stock market to open. Like I mentioned in the beginning, there's a bunch of manipulation here, right? Like everyone's screwing up the market because all the orders just came in for the night before. Once we determined the direction of where banks are trading, because the momentum came down, we follow them. So they enter a sell, we enter a sell, and we ride that down just like they do. Same situation with right here. But this was a weird situation. This doesn't happen too often. Like we entered a sell right here after the stock market opened. So the stock market opened right here at 6:30. It opened right here. We didn't take this because like I mentioned, there's manipulation when the market just opens, so all the orders flood in. So as soon as the market opens, you see there's a huge spike down because all the orders from the week from I don't know if this was, what day was this? Yesterday, yeah. So yesterday when the market opened, all the orders from overnight came in and it pushed price down, and then it corrected back up, and then it came back down. And then right here is an invalid signal. And then right here, we got a valid signal. So we figured that the banks are going to be pushing price down for that day. The thing with this is US 30 just started moving crazy like the entire day, and then today as well. So price came up, came down, and then it was in red for the entire like day. But we ended up holding on, and then actually hit TP1 first right here, and a lot of people got out. But then some people held on to it, like myself. I usually don't hold on to it, but the market's been so good that I was like, all right, I'm just going to hang on to it. So I hung on to it, and I started tripping out all night because this doesn't usually happen. You know, it's either hit stop loss or it just hits our TP. But right here, price was pretty much just going sideways. And then this morning, this happened. It came straight down, hit TP2, and I finally got out. And then as you can see here, you know, US 30 is just moving really weird for the entire day. So I wouldn't recommend taking this trade or this position or this asset from now until next week, until something, you know, until they figure out a direction of price, because you don't want to be trading when it's consolidating. But yeah, guys, so it looks like that's it for the questions. It's about to be 7 right now, so we've been on for a little over 2 hours, maybe. Let's see. Yeah, we've been on for about 2.5 hours. So I think that's it. But if you guys have any other questions, feel free to you know, message me on Telegram or message me on Instagram or Facebook or email, whatever you guys want to reach me by. But if you guys are new here, just a reminder, we have this every Tuesday and Thursday at 5 p.m. Pacific Daylight Savings Time. So if you guys have any other questions, feel free to attend the next webinar on Tuesday, and I can go ahead and answer any of your questions. Also, if you guys want to sign up for K2, you can go to our website, k2trades.com. And then we still have our trial going on right now for $50. So if you sign up for the trial, you'll have access to the indicators, the courses, pretty much everything, the premium groups. And then you guys can learn how to trade exactly how I do. Otherwise, I'll catch you guys in the chat. And then this will be on YouTube shortly. All right, guys, thanks for showing up, and I'll see you guys later.